What's up, guys? My name is Julian, your solar expert, and today I'm going to explain how solar financing is very manipulative and how different solar companies and solar salespeople kind of are manipulating a lot of these solar financing figures because they want to sell you a system. And don't get me wrong, transparently, yes, I'm a solar salesperson, but my goal is to actually help you the right way and help you understand what you're actually buying, because I never want anyone saying, hey, you sold me something that I didn't understand. So I'm going to be explaining today in terms of financing, how dealer fees and buying the interest rate down is something that you need to understand if you're going to be financing solar. Especially, it's hard because most of the time the solar salesperson is not even giving you options to buy down the interest rate or not. They just give you one option with one interest rate, and that doesn't allow you to game the system to your advantage. So first I'm going to be explaining the dealer fees and buying down the interest rates and how that affects if you want to pay the system off early or not. And then secondly, which is also extremely important, I'm going to be explaining this 18-month runway and how about 90% of solar companies offer loans which have these 18-month runways built in, which is a good tool, but when it's not explained, you get angry because you're expected to pay down a bunch of money to keep your payment. So, and before I get too far into this video and forget, don't hesitate to reach out to me. I work in almost 30 states and I'd love to help you out. I even have a whole team of experts around the country that can help you go solar with honest, real information, no sales BS. I mean, yes, transparently, we are salespeople that want to sell you the system, but we want to do it the right way. I really want to emphasize that. And so anyways, back to the video. This isn't just about that, but if you do want help, please don't hesitate to reach out. My number is 760-473-5878. All the information is below in the description. All right, let's continue. So first off, when you go solar, now this video is not about what you're getting for this $49,745. That's for another video, but what this system costs, cash price, if you were just going to pay for it, is $49,745. Now, if you want to finance this, let's just go into a couple of these options here. So let's click on ENFIN, for example. So you can see I have these different interest rates. Let me move this over so you can see all the different options here. So you can see that, you have different interest rates. So what are these different interest rates? Is it dependent upon what you score, what your FICO score is? No, it's not. This is, of all these interest rates are available to pretty much everyone. Obviously you have to qualify, but all these interest rates are available to everyone. The difference is the price that you'll have to pay. So let's click on a high interest rate. Let's click on this 10-year at 11.49%. 10-year 11.49%. Now the cash price is $49,745, but after it, it's gonna take a second to load here, but after it does its calculation, we're gonna see that now the price is $50,760, so about $1,000 more. Now, what happened here? What is happening here is the bank, which is ENFIN in this example, is taking $1,000 as a fee just to process the loan. And that is pretty good, actually. It's just $1,000 fee. Now, that's not really buying the interest rate down, though, because, that's a pretty high interest rate, 11.5%. So let's now go to another example. Let's do the same 10-year, but instead of the 11.49%, let's go all the way to the other side of the spectrum. Let's go to 2.99%. Let's see what that does. Now, before the payment was $543 on the 11-year before it refreshes. All right, now the payment has gone down here, $479. Okay, but look at this. Look at this. Okay, this is basically just shy of $20,000 that the price has gone up. Now, what is happening here? So this is a fee to buy the interest rate down, because now your interest rate is literally below the federal funds rate, which, if you know anything about financing, the federal funds rates is about 5.5% right now. That means that you can't get a loan for less than 5.5% because it's costing the bank more than that. So anything under 5.5% has to come along with fees that allow the bank to make money, because they're losing money on the interest rate already. So $69,000, $331, that is basically $20,000 that's going to go straight to the bank. And then still the 49,700, whatever it was exactly, that goes to the contractor. So the contractor ends up with the same amount of money, but you're going to now have to finance this amount. Now, one potential positive with this, why people do this, is because, as you can see before, the payment was in the 500s. Now it's 479. So you can get a lower payment. That's why this is. It's financial engineering. You can also get a bigger tax credit, which could be good if you have a big tax liability. But for a lot of people, and here in a minute when I explain this 18-month runway, you're going to realize that sometimes having this big tax credit is not actually a good thing. So those are the two reasons why you would potentially want to do the buy down. Now, the reason why I don't like the buy down, and this is what I explain to almost every single person, and I don't think any salesperson explains this. And here's what I mean, is most people, they say, hey, I want a low payment, but I also plan on, let's say, moving in 6 years and I'm going to sell the house. But right now, I think that it makes sense to stabilize my energy costs, save some money, get a tax credit, and add value to the house. And then, I think I'm going to be able to exit my house when I sell it with more money in my pocket because I did solar, which is, that's true. If you look at the math and how the market, values solar, that's totally true. And so what I would say, well, what you don't want to do is do one of these loans where they're jacking up the price way more than what the real cash price is, because in a few years, if you do a loan that you don't want to transfer, which I tell people, don't assume that you're going to transfer a loan, assume you're going to pay it off and the value of the home is going to increase. You don't want to have to pay off a big principal. So in my opinion, what makes a lot of sense more is to do one of these higher interest rate loans, 20-year, 11.59. Let's just see what that gets our price down to. So cash price 49.7. Okay, great. So that's basically a $1,000 fee. So here would be a good option if you plan on paying the loan off early, because instead of having to write a check for the remaining balance of your loan, which in the other example with the really low interest rate was $69,000, and yeah, the net cost is less after you factor out the tax credit. It was around $49,000, but here, then even with the net cost, you're at 35. So when you go to pay off your loan, because the real cost of your solar is your payments plus that check that you're going to write when you pay off your system if you move. And so if you combine everything together, this ends up being way, way, way less money, even if you do, I kind of my bad for not bringing up a 20-year with the super low interest rate. Let me actually just show you guys like how sometimes they work it to get a low payment. Let's do this. Let's do a 25-year, 3.99%. And let's see how low this payment gets, because I just want to show you guys. Okay, perfect. 291. So $76,000. All right. So obviously what you don't want to do is say, yeah, I'd rather save an extra $120 a month now, but in 5 years, the check that I'm going to have to write, instead of it being $35,000 minus whatever payments you've, paid and eaten into the principal here, it's $53,000 with whatever you've paid into it. So it's like this is going to end up being a $15,000 check more that you're going to have to write at least. So it's not worth it to try to save $100 a month now when the check to get out of it in 15 years is so much more. Okay, so that is the first point of this video, is explaining the buy downs and why you want to do a higher interest rate if you plan on paying it off early. Now, on the contrary, real fast, just to give the devil's advocate and understand why you do this once again, if you don't plan on paying this down early or ever pay the loan off early, well, in that case, it is just about your payment. And it does make sense to get the lowest payment. So that is why you'd want to do that. And you get the biggest tax credit now, which is good. But here's the second part of the video. So the tax credit here is required to be paid down. Now, this is like 90% of solar loans out there. So if someone's going through like a credit union or something, this type of structure may not apply. But 90% of solar loans out there have this 18-month runway structure where if we zoom in here, let me try to make this bigger here. Okay. So if we look carefully, it says that the amount, this payment, this $291 is your payment basically for the first 18 months. And within the first 18 months, at month 18, right, you have to write a check for the amount of the tax credit, which is $22,959 in order to keep this payment of $291. So essentially what this $291 payment is kind of like you're just financing $53,000. That's more like if you were to plug this into your loan calculator and you were to say, hey, I'm going to borrow like $53,000 for 25 years at the 3.99%, it would be pretty close to this. It's going to maybe be slightly different, but it's going to be close to this. You'll never put $76,000 in for 25 years at this interest rate and get a $291 payment. You'd see it just doesn't make sense. It doesn't add up. So what this loan is this is a promotional rate, not a promotional rate, but it is the rate as if you have only really financed the net cost. And what they're doing is they're saying, hey, you have to give us this $22,900 within the first 18 months, or else your payment actually goes up to $417. The reason why I'm making this video now is because interest rates are beginning to slightly come down. We've had about a 1% drop in interest rates in the last few months. The salespeople, I have seen all of a sudden, like in the last couple months, again, a shift back to pushing financing. And so one of the manipulations that I'm seeing these salespeople do is ignore this whole 18-month explanation. And they're just basically saying, yeah, Mr. and Mrs. Homeowner, like, yeah, you're just going to have a $291 payment, and ignoring the fact that they're going to have to pay down this $22,900. This is okay. This is just a tool to help you get a lower payment right out of the gate versus have a higher payment, which would be how like some of the credit unions work. Your payment would actually maybe be like $417 right out of the gate, whereas with this it's $291. With the credit union, maybe after you get the tax credit, then they'll re-amortize you down to a lower payment. But you do have that payment that's higher initially. And so in order to solve that problem, that's why they do this 18-month runway the way they do, because they can give you that lower payment right out of the gate. All right, anyways, I would love to help you go solar. I actually service 30 states. Please give me a call. I actually have a whole website as well. Tons of other videos that explain tons of different aspects of solar. If you found this video helpful and you're still with me here, reach out. 760-473-5878 is my cell phone. You can call or text me, or my email is right in the description below. Hopefully this is helpful, and I'd love to chat with you soon. Thank you so much for watching this video.